Hello, and welcome to the next episode in our How to Apply IFRS 16 video series. I'm Jessica Taurae. I lead our global technical accounting team for lease accounting under IFRS. I'm joined today by Richard Brown from our global technical team. Today we'll talk about identifying all of your leases. Richard, could you explain what companies should be considering with that?
Absolutely. So there are some leases that are very clear cut. It says lease on the front. For example, a real estate lease for a factory, an office block, a retail unit. You know it's a lease. It was a lease under the old accounting. It will continue to be a lease under the new accounting. There is a new definition of a lease in IFRS 16 though. So for some of the more complex arrangements, you will need to do an assessment to see, and maybe it was a lease or wasn't before under IAS 17, but that answer could change under IFRS 16, so you will need to do an assessment. The new definition of a lease has a few key elements to it. So first of all, do we have an identified asset, which is similar to what we had to assess in IAS 17. Secondly, we have to ask, do we control the use of that asset? So controlling the use has two parts. Do we have the economic benefits? And if we're the only customer, then typically we do. And do we direct the use? So directing the use is the main new concept in the definition. And directing the use looks at who decides when the asset's used, where it's used, how it's used, what it's producing, if it's an asset that produces something else. So it is a new assessment. There are some arrangements that will be right in the details and complex, but a lot of the time it is fairly straightforward to see that you are directing the use of an asset, you are leasing the asset.
So I can see in sort of purchase contracts and outsourcing arrangements, you probably need to look a bit more carefully. Can you give us some other examples of where we're looking for leases or finding leases?
Yeah, absolutely. So we've been working with a client recently who had signed a haulage contract. So rather than them owning the trucks and transporting, they were using an expert haulier to do that. So the arrangement was that for the next 3 years, they had a certain amount of goods that they would need transported at capacity effectively. And the haulier had to dedicate 5 trucks to them and had to decorate them to put the branding of the customer on the side of the trucks. So in that arrangement, we probably would have an identified asset. Even if the haulier can switch trucks for things like repairs, that wouldn't be enough. It would still be an identified asset. We'd then say that the customer's taking substantially all of the benefits because it's always their goods that are being transported in these trucks. And we'd then ask who directs the use of the trucks. So typically, and in fact in the arrangement we saw, the customer was directing the use because they choose where those trucks run from, where they run to, what times they run, what they're loaded with. And so they met all 3 of the criteria. They had an identified asset or assets for the 5 trucks. They took all of the benefits and they were directing the use. And so that was a lease, even though it didn't say lease on the front, it said haulage contract.
And is really identifying whether you have a lease or not something new?
It's not new, so it's something that people should always have been doing. It just didn't get the level of focus before. So in the old or the current accounting IAS 17, the difference between an operating lease or a service, some kind of haulage costs, weren't really particularly significant. Either way, it wasn't on balance sheet and it was just an expense in P&L. The problem comes with IFRS 16 putting it on balance sheet. So there's a very clear difference now between the leases going on balance sheet or not having a lease and just going to P&L without it being there. So it's not a new concept, it's a new definition. So there genuinely are some things that were leases before and will not be, or vice versa. But more fundamentally, there's a lot more focus and it matters a lot more to actually do the assessment.
Thanks for that, Richard. So just to summarize, as well as considering the agreements that you've always thought of as leases, you should identify any leases embedded in your other arrangements. Thank you for listening. I hope you'll join us for the next video. And for more information, please visit pwc.com/IFRS 16. Thank you.